One of the main things I keep driving home here on my channel of why we are not going to see home prices continue to go up, up, and up is due to affordability, guys. And you know, time and time again, we keep getting more and more reports about what the status is of affordability for the average buyer, and it's not looking good. In fact, according to a recent report from Redfin, 41% of people's paychecks now are going towards house payments. And that is the median income earner throughout the United States. So that's far beyond what people are supposed to be spending on housing, between 28 and 30% of their gross income on the house payment. This just covers your principal and interest payment, that 41%. Doesn't cover property taxes, doesn't cover insurance, doesn't cover upkeep on the house, doesn't cover any other type of cost of living increases that people usually have to pay along with their house payment. So realistically, you could say that these people more or less spend 50% of their income on house payments. Now, this is not exactly news. This has been happening for quite some time now. But when we look at how much that affordability has diminished, that's really the base case argument for why we're not going to see home prices continue to climb into 2024. And if we do, it's going to be by a very small margin, and it's going to be in localized areas, because other parts of the country are already starting to see some home price declines. And to just show you how much things have changed, for example, when Redfin started collecting this data on what percentage of people's income is going towards the house payment back in 2012, it was roughly half of this number, okay? So today it's 41%, back then it was 20%, okay? So 2012 was an excellent time to buy a home still, and what did we see after 2012? We saw prices continue to go up, right? Why? Because affordability was there, guys. It was there for a very long time, and with the Fed keeping these interest rates at extremely low levels throughout that time period, it just blew up this market. Now, one of the big reasons why affordability is not keeping up is because wages are not keeping up. But we can get a preview of what the return of affordability looks like in the US housing market by taking a look at what's happening right now in Austin, Texas. Because in Austin, a median income home buyer there would now need to spend 36.6% of their earnings on a median price home. That's a 1% decline from a year ago. So not a huge decline, but the portion of their income is starting to come down and is below that 41% average that we see nationwide. What affordability really looks like is Pittsburgh and Detroit, where people only spend about 25% of their monthly gross income on their house payment. 25% is a very healthy number when it comes to being a homeowner, and that's what most people should be striving for. One thing I think we're going to have to see happen in order for buyers to come back into the market is not just the interest rates coming down, guys, because that's what we keep hearing as the main narrative from the media. Oh, as soon as interest rates come down, everybody's going to flood into the market. Well, we just saw interest rates come down recently, and it didn't happen, guys. You had a slight uptick in mortgage applications, but even more so, we saw an uptick in refinancing activity, which I'm going to get to that in just a minute because that's a pretty interesting thing to discuss. But first, why is affordability recovering in Austin? Because home prices have come down dramatically. Home prices in Austin, Texas are down like what, 12, 13% year over year right now, and that's a pretty substantial drop. And so that's what's really returning the affordability to the housing market there. And that's what we're going to have to see all over the place if we want to have any shot of people rushing back into the market, guys, because so many people keep buying into this narrative that, oh, we need to see interest rates come down. That's going to save the market, guys. Well, interest rates dropped almost a full percentage point for a 30-year mortgage over the past month. And guess what? People didn't flood back into the market. Why? Because prices at those rates are still too high. Even if interest rates came all the way back down to 3%, I would wager to say that we still wouldn't see massive home price growth moving forward, mainly because even if you're only getting a 3% mortgage, it's still too expensive at these prices in a lot of areas, guys. There's only so much room for the price to go up until people just can't afford it anymore because they simply can't qualify for the loan. It's not any more complicated than that. But when you start to see these substantial drops like in Austin, you see affordability return to the market. But also what you see is inventory is exploding in this area, okay? And people aren't buying the home still for a couple different reasons. Number one, it's still too expensive. And number two, when people start seeing the price of anything come down, their mentality completely flips from the FOMO mentality to, maybe I should wait a little bit longer to buy that house, because chances are, if it already got this cheap in a year, it's probably gonna get even cheaper in a year from now, which normally is the correct mentality to have when you're looking at buying a home. Now, at some point, obviously the markets bottom out and prices start to go back up again, but we're not anywhere close to that point. So going into 2024, I don't see affordability improving dramatically unless we see dramatic price cuts across the board, guys, which we probably won't see unless we have some kind of major economic issues that cause that to happen. We see a lot of forced selling and a lot of people putting their homes on the market that don't want to, but they have to. So that is a possibility if the economy takes a turn for the worse in 2024. But, we've been told over and over again that, people who have 3% interest rates are not going to be selling their houses, guys. Well, they are selling them right now because they can't wait anymore. People are starting to realize that these interest rates are not going to be going down by much anytime soon. Even with this drop recently, it's not enough to bring back affordability, like I said. And so people are starting to realize, hey, maybe I should just get on with my life and sell this house and move on, So I think you're going to see a lot more of that happen in 2024, and a lot of this is being reflected in the amount of inventory that we see continuing to creep up. Here we have a house for sale for $1.3 million, and it's another flip because they bought it back in 2022 for $940,000 back in May of 2022. They tried listing it for sale like the next month in June, okay? And they wanted $1.359 million for it, and they've been just steadily decreasing the price all the way down to 1.1 at the end of last year, took it off the market, put it back on the market again this year for the same original listing price, around 1.3 million, and here we are, this place just sitting on the market. It's also for rent too, for $7,500 a month, and the property tax bill is 17 grand a year. Now, a minute ago, I was talking about how we saw interest rates come down from roughly about 8% for a 30-year mortgage down to around 7% right now for a 30-year mortgage. So it's dropped about a full percentage point. Did buyers rush back into the market? No, but people refinancing did. So why would you see that happen, guys? Because here's something interesting. The refinance index went up 15% this past week from the previous week because of these drops in mortgage rates, which is 10% higher than the same week a year ago. Well, why is that happening? Why are people refinancing if interest rates are still 7%? Doesn't really make a lot of sense, because literally 90% of people who have a mortgage out there have a rate that's under 6%. So why on earth would people trade in a 6% interest rate for a 7% one, or even a 5% interest rate for a 7% one? Oh, they probably wouldn't, unless they need to cash out that equity and they're using this money to pay their bills and survive in this economy. And this is something I talked about a little over a month ago in one of my videos, that people who are getting refinances right now, that's exactly what they're doing, guys, because nobody refinancing is taking a lower rate. Nobody's going from a 9% to a 7%. These people are jumping from a 5% or a 4.5% to a 7% in order to cash out that equity for now. Last time I was here, or last few times I was here, this house was still for sale. I have no idea if it still is. I see the signpost here. Let's see what's going on. Holy spicoli, guys, I cannot believe this house is still for sale. I thought for sure maybe it was sold since the sign is gone. Nope, they still want 1.1 million for this house. And mind you, they bought this house in 2021 for $515,000, have been actively trying to sell this house since February of 2022, originally listing around 1.35 million, and it has not sold. This house has been sitting empty for close to 2 years. 2 years, guys, let that sink in. That's the epitome of greed right there. Meanwhile, paying this crazy property tax bill of $12,000 a year. No one's living in this house, but now it's finally for rent at $6,000 a month, just sitting here empty. Unreal. So this report says that refinance activity saw its strongest week in 2 months. So that means people have been just reeling on the sidelines, waiting for rates to drop so they can suck some more cash out of their house. And newsflash, guys, if this is the only way, if people can afford to pay their bills right now, is to take out equity from their home and refinance up to a higher mortgage rate than they have right now, that is a guaranteed future housing crash. Whether it's going to happen next year or 3 years from now or 5 years from now, it doesn't really matter. The point is that we're seeing something strange. We're seeing all these strange anomalies happen in this market. Inventory rising in the wintertime. When does that ever happen? Never. People refinancing from a lower rate to a higher rate. When does that ever happen? Never. Affordability being at all-time lows. When was the last time that happened? 40 years ago. So you know what I'm saying? Like, there's too many things that are putting pressure on this market. And for people who think that things are just going to continue to go up under these circumstances are just kind of delusional right now, because there's really no pathway for things to continue to go up. The only solid argument from that side of things is the low inventory, guys. But with this low inventory, we also have low demand, and that's reflected in the pending sales numbers as well as the closed sale numbers. But I found this story today that talks about how this entire situation affects regular people, and I figured a lot of people out there who watch my channel could relate to it, so I want to throw this in today's video. So this chronicles a couple of different people. The first guy is somebody who moved to Philadelphia from Denver, Colorado recently, and he was looking at buying a house in the area, but after doing some research and a couple of months looking to see what's around, pretty much determined that renting is going to be the better deal. I mean, this guy was paying $2,000 a month in rent, and in order to buy a similar house for what he's looking for, his payment would be anywhere between $3,000 to $4,000, guys. So, you know, you're saving a ton of money. And that was my situation that I kind of talked about the other day. You know, that was me, guys. Like, for the longest time, if I wanted to buy a similar place from where I was renting, it would literally have been double. I was paying about $2,000 a month in rent. The mortgage payment with HOA and everything would have been over $4,000. So it was a no-brainer to continue renting, and only until those numbers got close to each other is when I decided to buy. And I think a lot of people like this guy are thinking like me and are in that same position, because why would you spend all this extra money to buy when it makes no financial sense? Unless you have some sort of urgency or some real solid reason to buy in this situation, you're probably just going to keep renting. This is what he said. He goes, "I was looking over it all, and I just kind of realized that now is not the best time to buy, just given the mortgages and everything like that." So he did his homework. He's looking at what a mortgage would cost him at a 7.5% rate. Obviously, that was like a month ago's rates, whatever. But even at 7%, it's still too much. And one thing that this story mentions that I have to point out here is that almost 2/3 of all mortgages have a rate below 4%, and 90%, okay, 90% of mortgages have a rate below 6%. And that is data according to Freddie Mac, guys. So why on earth would anybody that has a rate that's below 6% be refinancing right now when rates are at 6%? Something doesn't smell right with that. Man, do these people really crack me up, because this one is a flip, and clearly nobody is getting the picture that $1.3 million for a house that's not waterfront in this community is too expensive. Because the original person bought this place in 2022 for $800K, was able to flip it to somebody else for $1,089,000. Then they turn around and listed it for sale in the middle of 2023 for $1.45 million, and have now cut the price down to 1.3, and they think somehow they're going to get this house sold. Well, good luck, because your neighbor over there can't even sell his for 1.1, and you got a property tax bill of about $14,500 a year for this house to just sit here empty, guys. When are these people going to wake up? How much money do they really have to lose? And you know, it's things like that that you're not going to hear from traditional media sources. They report, oh, you know, 90% of mortgages are under 6%, and they report that refinancing activity was up 14% last week, but they never cover why. Why are people refinancing in this environment? It really doesn't make any sense, right? That part of the puzzle is missing. And that's what I'm trying to do here on my channel, is to put those missing pieces of the puzzle back into play so people can see the full picture of what's really going on. But anyways, getting back to this guy who's choosing to rent, he said it's going to depend on several factors of when he jumps in to buy a house. The first thing he's looking at is when mortgage rates begin to go lower, okay? Rookie mistake, guys. This guy's younger. Clearly he is watching too much news and not really paying attention to what he should be doing. So that's mistake number one. He's looking at when are rates going to fall, because he thinks maybe when it gets around 5%, you know, maybe he'll start looking again, but he would be open to rates, you know, as high as 6%. That's not going to move the needle, guys. It's not. I'm sorry. Your house payment is still going to be too high at these prices, and you're still going to be spending a lot more on a mortgage than you are in rent under these circumstances. Now this house here is a rental, and it really paints a really sad picture of the current state of this market, because it's at $18,500 a month. And wait, if you think that's a lot, originally they were asking $25,000. So massive price cut, and this house has been sitting empty for the past 6 months because they listed it in June for $25,000. Nobody's renting it. But the price of this house is really sketchy when you look in the past, guys. All the way back in 2016, they tried selling this house for $3.15 million, and sequentially tried to sell it other years after that, 2017, 2020, for $2.6, which is far less than 2016. Still could never sell it. Turn this place into a rental that is not renting. I mean, what is going on in the minds of people that are doing this? I mean, it's really kind of sad, frustrating, and scary all at the same time that this is the state of affairs with the housing market. And these are all houses that regular people could be living in if it wasn't for all these shenanigans that are going on. And FYI, their property taxes are $56K a year. But at least there's one smart thing he said he's going to do, because he said he's going to wait a year from now to see what happens in the meantime, to see where the market ends up within the next year before making any radical decisions. But the problem is, even when people say that, they don't stick to their guns. If somebody pushes them, like a mortgage broker or a real estate agent, you know, puts pressure on them to buy, and you know, that's how a lot of people end up getting hurt. You know, they end up listening to somebody else rather than themselves and pull the trigger at the wrong time. Because basically the guy signed a 1-year lease, and it's like, okay, let's wait a year. I'm living in this place. I have a place to live for a year, and we'll reevaluate it then, which I think is the level-headed approach for people to take right now. Problem is, not everybody takes a level-headed approach when it comes to real estate. In fact, it's quite the opposite many times. And here's the smart piece of wisdom from this, guys. He is hoping that the extra savings from waiting an extra year can help him make his purchase stretch even further when searching for homes. So say, for example, if prices in his area don't come down to the level he wants it to, but rates do, and he was able to save up an additional chunk of money, maybe he's able to bring that payment down to close to what he is getting in rent. And I think that's a smart approach for people to take right now. People that don't want to keep waiting, they're very impatient, and they're just like, you know, I'm tired of renting, I don't want to keep throwing money away. But if you can close the gap, okay, if you can close the gap from paying $3,000 for a mortgage and only $2,000 on rent, and let's say you can bring that mortgage down to $2,200 or $2,300 with a higher down payment, then maybe it would make sense for somebody like that to jump in. That's only up to you to decide, guys. Like, I can't tell you what to do, and that's why you need to research your own market. I give you guys the broad trends, you know, the broad strokes of what's happening in the market, but only you can really analyze your neighborhood and where you live and what you see happening with home prices and inventory, and make that decision for yourself. Speaking of real estate agents, if anybody needs an agent, guys, I have a 100% free service for you. Whether you need a seller's agent or a buyer's agent anywhere across the country, just use my link down in the description below. I'll get you set up with somebody ASAP, and if you use the link, it helps you and it helps the channel, and I appreciate it. So clearly, this whole dynamic right now of, this guy's 27, by the way, he's taking a pretty level-headed approach other than being too concerned about what rates are doing. You know, this is having some severe impacts on younger generations as a whole, guys, because right now, for the first time, the average home buyer's age has increased to 36 years old. And that's a pretty big difference, because for example, this guy's 27. His father bought his first house when he was 23, guys. So imagine going from becoming a homeowner at 23 years old compared to 36 years old now. That's a 13-year difference. And that has a major impact on people's forward mobility in life, depending on what their goals are. Not only that, but people need to have a far greater income. You need to have a $115,000 household income right now to be able to buy at today's prices. And the average household only makes about $74,500 a year, guys. So not even close to that amount that people actually need to make to buy these homes, which is why I keep saying that you're gonna need to see these prices come down more for people to rush back into the market. And Austin is the perfect example of that. Prices are down 12, 13%. People are still not rushing back in, and inventory is going up. But you know who else this whole thing affects? Real estate agents. We already talked a lot about how mortgage lenders are being affected by this. We see all of the financing shenanigans that are going on with these lenders, offering people mortgage rate buy downs, offering free closing costs, offering a free $5,000 credit at closing on behalf of the lender. All sorts of crazy things to get people into the door right now. But what about real estate agents? Well, they talked to a real estate agent in Virginia, and she said that during the pandemic, when interest rates were low, she was seeing anywhere between 10 to 20 offers per home. Now it's only about 3 to 6 offers per property, which is still a lot, by the way. But she's also noticed much less traffic at open houses, and showings are down as well. She's saying that we're also seeing properties advertised differently. She's seeing more seller financing options available in her area, mainly because these interest rates are too high, and that's another way to get home buyers through the door, just like the mortgage companies are doing. So these sellers are offering below market interest rates to try to attract buyers into buying these homes. They talked to another real estate agent up in Minnesota. She's been in the real estate business for 28 years. She said that the buying activity in her area has diminished pretty substantially. Just for her company, her real estate brokerage that she works for, the transactions that that company's doing is down by half, guys. Half. Imagine getting your business cut in half right now. She said that they're seeing a lot of people looking, but people aren't buying. She said the number one question that she gets from all of the buyers right now are, when are mortgage rates gonna go down? Which means to me, guys, that the videos I'm making are not having the impact I would like it to have, because that is the wrong question that people need to be asking. Just like this 27-year-old, he's more concerned about when the rates are going to go down than when the prices are going to go down. And of course, she tells them the same old BS that, oh, don't worry, you can still buy now and refinance later. Just another lie. But yet it's funny because at the same time, this woman's been in the business 28 years, and she said, you know, our industry is very cyclical. Housing is very cyclical. I'm excited to see what the future is going to bring, and I think educating consumers is one of the greatest things we can do as realtors. I agree, which is why I have this YouTube channel, so I can educate people on the pitfalls of buying houses, especially right now. And she even just said herself that real estate is cyclical. So we already went through the up cycle, so what's the next logical cycle for us to go through? The down cycle, right? I mean, it's not rocket science, guys. I'm not sitting here promising a certain percentage of crash, or that we're gonna see foreclosures hit the market like we did back in 2008. That's not what I'm saying, but I am saying that there's still a lot more room for things to come down, and there's also wild cards that we don't know that can influence how much things can come down. So you really need to be careful right now and really be doing your own diligence when it comes to researching your neighborhood and researching the home before you pull the trigger on anything. And then real quick, they talked to a couple that just got married a year ago, last November, and they said, you know, we just bought anyways because we weren't concerned about the timing of the market. We just wanted to own our own home after getting married. And that's the kind of thing that people do when it comes to buying houses, which is kind of funny, you know, because buying a house is like a really big deal, right? It's a very expensive purchase, probably the most expensive purchase that people will make in their lifetime. But yet so many people are just willy-nilly about it and like, yeah, well, we just got married, so it's probably a good time to buy a house. Okay. Or people do the opposite. They get married and they blow 40 G's on the wedding that they could have used to buy a house if they actually wanted to buy a house. And then they expect everybody to bring them all these gifts and give them, you know, more money for a deposit on a down payment for a house at their wedding because they just blew it all on the wedding. Like, how does that make any sense, guys? So people do some really stupid things sometimes, and I just like calling it out. So the takeaway I want people to have from this video is you shouldn't be feeling the pressure or the FOMO any longer in terms of worrying about home prices going up, guys, because even if they do go up where you live, it's going to be very minimal due to this extremely low demand situation that we're in right now. And there's so many headwinds that are hitting this economy. So to me, there's no shame in having patience and just waiting to see what's going to happen next. Just like this kid, you know, he's renting for a year. A year's not that long. A year's nothing throughout your lifespan, okay? And to think that things are going to change dramatically in a year is pretty unlikely, you know? Now, people who waited a year when it was 2020 to wait to buy till 2021 did see dramatic changes. Same thing, people waited throughout 2021 to buy in 2022. There were massive changes, but those changes are not normal. And unfortunately, I think you have a lot of young people entering the housing market or wanting to become homeowners right now and saw this crazy situation that we had with the pandemic and how high prices went up throughout the country. And they see that and they think this is just the normal cycle. They think this is the way it's supposed to be with real estate. And the truth is, it's anything but. It's not supposed to be like that at all. And I think right now we're entering a time when the market is going to exhibit much more signs of normal behavior as the rates stay higher for longer and as more people realize the party's over and I need to sell this house regardless of what's going to happen because I need to move on with my life. And that's the normal market cycle that we're going to be slowly returning to into next year. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.